very strong holders of the coin. And we can see this from tracking the flows of coins out of the exchanges, where typically people speculate or buy and sell their coins, and they have a set inventory, some of which is allocated for speculation. And we've just seen an unprecedented amount of depletion of that inventory. If you look back in the 2017 bull market, we saw like a 5-month depletion of inventory, and that was enough to propel the bull market of 2017 right up to the 20,000 from what initially was about $1,000 to $1,500 when that inventory depletion ended. And now we're kind of in this zone of 11 to 12 months of inventory depletion. We've not seen this before, and you can look on chain and look at the holders, and you can see the wallets that the holders, the behavior of the wallets by the holders. And there's a category where we term illiquid. These guys are just accumulating, buying and accumulating without any history of selling. And these guys are just hoovering up the coins. So there's a real supply shock. There's less and less coins each week that goes by that's available to be bought. And so obviously there's a mismatch between demand and supply, and that has launched the price vertical. And for some technical traders that do trade indicators on the price fluctuations, they're all screaming overbought, overheated, whilst if you look into the ledger and see the demand and supply of the coins by fundamental investors, you can see that it's fully supported. And so I run a very simple model. It's called it's a mean reversion model, which is in simple terms is a moving average on the market cap, all-time moving average, and you can use that to predict tops. It has predicted every top in Bitcoin history, and so currently that top target is launching upwards. And at the start of this year, January, it was zoning into a area of $200,000 to $300,000 by December. And December of this year is typical to what we would expect for the end of a bull market. If we get that, not saying that will happen this time around, but if we do top out in December, that target now is lifted to above 300,000 because the trajectory of that upper band of that moving average.
Well, that's really exciting. And so earlier when you were talking about all these holders who are buying, moving the Bitcoin off exchanges into wallets that do not really have a history of selling, who do you think those groups or people are?
It's very unusual because normally what you expect is as more retail comes in, more mums and pops, ordinary people off the streets, they tend to buy their coins and hold them on their exchange wallet because it's just a very easy experience. So we've had this general trend of more and more coins being stored on exchanges like the Coinbases of this world. It's a very easy to use experience. But in this particular cycle, we're seeing huge amounts of coins move off exchanges and being locked away under their own custody. And that's a signature of institutional players coming in and high net worth individuals. They tend to store their coins under custody and in cold storage. So those clues and just the sheer size of the purchases, you can see the size of the withdrawals coming out from the exchanges. They just really point to institutions scooping up coins. So it's very, very unlikely it's anything else but the institutions.
And by that, you mean like Tesla, MicroStrategy, the corporate treasurers that are buying Bitcoin, or are there any other institutions you would include in that bucket?
Yeah, institutions is kind of a menagerie, really, because in simple terms, it's just coins held by a custodian for a whole lot of people, whether that's Tesla and their shareholders or fund managers. So it's looking like we've got hedge funds coming in. We've got the corporate treasury led by Michael Saylor and MicroStrategy, and now the latest is being Tesla. But we've also seen announcements that it's pension funds as well. Grayscale said that they had a lot of strong buying from there. I've just seen that New Zealand has announced that one of their funds for pensions has bought into Bitcoin in October. So, yeah, across the gamut, there's all sorts of institutions buying right now. It seems like the word is out that Bitcoin is now a valid investment alternative to gold in these times.
And so then if we were to zoom out and kind of look at Bitcoin in its trajectory of, let's say, like historical adoption, like if we were to look back 50 years from now and look at this moment in time, then where would you both say Bitcoin kind of like is currently in its historical adoption period?
Well, I have a question, Laura. I'd like to ask Willy, because his comments I found really super interesting, because I don't really dig into what happens to coins as they flow into the blockchain, they get taken out of exchanges. That's his expertise, not mine. But what I have noticed looking at the exchanges in terms of the bid-offer spread, what happens on the bid, what happens on the offer side, is oftentimes when a market blows off, and we hear some people say this is a big bubble, we're blowing off, Bitcoin's a bubble. There are characteristics of a bubble. One of them is that markets go up fast with bids. There's aggressive bids that take place in the late stages of a bull market that kind of blow it off. And all those bids come in and chase the market. It's FOMO. What we know is retail FOMO takes place within the whole market. This market is very different. What I've noticed is the market's not necessarily going up on aggressive bids. What's happening is an offer comes in and just immediately gets taken. And so this nature of the bull market is such that what I see is whenever something is offered, it's just taken immediately by somebody who's willing to take the offer. So rather than going up on bids, it's going up on higher offer prices, higher and higher offer prices. That may sound like there's really no difference to people who I'm familiar with how markets behave. But for me, as a technical trader, that's really significant, because it shows me that there are big names, there are big, deep top pockets that are saying we're not going to chase the market, but whenever something gets offered, we're willing to take it. And that kind of resonates very well with what Willy described.
Yeah, so you're saying that whenever there's a big offer on hand, large enough for a very large purchase to come in, they'll take it because there's not a lot of offers that size that's on the table, and they're just waiting for whenever there's an offer, they'll take it. Yeah, that's interesting.
I have another question that I'd love to ask Willy. And, Willy refers to Bitcoin as a technology, which it is. But the interesting thing for me is in those cases where I have seen an asset or a market or a commodity have the kind of parabolic advances that we're seeing, what they have been primarily is currency markets. They've represented the destruction of a currency, a monetary system. They have been the currency against the dollar. So in other words, how many of these currencies can $1 buy? We saw it in the German mark in the 1920s. Your production guys may have a quick chart of that. It's not a very good chart, but it does show it. We've seen it in third world currencies in Africa, in third world. This is marks per US dollar in the 1920s. And what it shows is we went from kind of late 19 teens of 5-6 marks per dollar, and then we go into really the destruction of the mark at that point, which was obviously connected with a previous political structure, but we saw the mark become worthless. And we've seen that with third world currencies, African countries, Latin American countries. And so when we look at Bitcoin beyond just being a technology, but being a form of money, the only other charts that I can see when I look back in history that have a similar parabolic move have really been currency charts that have been the destruction of that currency. I'm just curious as to how Willy relates to Bitcoin also as a form of money, as a monetary system, because monetary systems are the only places where I've seen charts that have a similar parabolic move.
Well, it's absolutely fascinating, Peter, because like I look at this chart and I go, yeah, that's exactly right. I'll flip those currencies and I'll go US dollars per Bitcoin. And that's essentially what we're tracking, this destruction of fiat currency as Bitcoin starts to suck in that monetary base. I think what we're witnessing here is the birth of a new monetary base, which is no longer based on fiat. It's based on consensus agreement that this has value, and this thing is a value that can be stored online, digitally moved across borders within seconds.